The post-war period was a golden age for home ownership. Workers from all social classes were able to buy their own home. Home ownership rates soared, and the idea of owning your house was a key part of the national psyche. The American dream is perhaps to become very rich. The British dream was just to own your own house. But with a ratio of house price to incomes rising to levels last seen in the Victorian age, a new generation remains priced out of the market, flat sharing and private renting into their 40s and 50s. And this new housing market is having important implications for lifestyles and society. But first, why has the housing ladder been pulled out of reach for many people? Since the mid-1990s, real house prices rose 160%, but real incomes for young workers rose by only 23%, causing a sharp rise in the house price to income ratio. The result is that home ownership has become increasingly the preserve of high income earners or those with wealthy parents. Back in 1970, just 19% received help from their parents in order to buy. By 2020, this had risen to 53%. This is an interesting graph from the Financial Times. It shows that if your parents don't have wealth, you need to earn on average around £25,000 a year more to be able to buy a house. Housing unaffordability has led to wealth inequality. Housing is no longer the great leveller, but increasingly the great divide. House price to income ratios are the highest since 1870, an age not particularly noted for income equality. Now, on the positive side, the ratio of house price to income ratio is forecast to fall in the next few months and years because of falling or at least stagnant house prices, whereas inflation and nominal wages are rising. But even if it fell to 7 times income, that's still nearly double past trends. For households in the late 20s, they currently face around 19 years of saving for a deposit in order to be able to buy a house. And this compares to just 3 years in 1986. And it's changed living patterns with a significant rise in the share of young people living with their parents. And also it means that the private rented sector has become a lifelong destination rather than a temporary stepping stone into buying a house. Now, despite higher interest rates reducing affordability for young people, the market has been propped up to some extent by wealthy cash buyers and homeowners who have paid off their mortgage completely. But if a goal of home ownership is shared across the political spectrum, why is it fading from reality? These are 5 key reasons. Firstly, the post-war period was a unique one of rising real wages. However, since 2010, this rise in real wages has really slowed down, barely growing at all. Secondly, in the 1980s and 1990s, there was a significant liberalisation of the financial sector. After being tightly regulated, banks and building societies were free to lend bigger income multiples and loosen lending criteria. Self-certification mortgages, income-only mortgages, and mortgages 125% loan to value. The result was that the ratio of household debt rose from under 60% in the late 60s to a peak of 180% in 2007. The surge in home buying and home ownership partly reflected this rise in private debt. However, this growth in credit is exhausted. The 2008 credit crunch and the implosion of former building societies and banks like Northern Rock and Bradford and Bingley caused a revaluation of mortgage lending criteria. Banks now have to stress test at higher mortgage multiples, and this is why the higher interest rates we saw in 2023 didn't cause the same kind of mortgage arrears we saw in the early 90s. And we're unlikely to see any liberalisation of mortgage lending criteria in the coming years. And also young people who in the past used government help to buy schemes to help get a bigger mortgage, that's now largely been removed, leading to less lending and credit available. The other big factor that enabled a rise in home ownership since 1980 was a right to buy your own council house. This enabled 1.7 million households to buy their own council house at below market prices. It enabled a large rise in home ownership rates. It was a ladder from social housing to home ownership. But the cost of the scheme is that it severely reduced the stock of social housing even as demand and the number of households was rising. What was once a significant entry point into the housing market is no longer there. This avenue for home ownership has now been exhausted. The loss of 1.5 million social housing has pushed up market rents and also house prices, meaning many low-income households are now forced into paying high private market rents. In the post-war period, the UK built up to 400,000 new homes a year. But in the past few decades, this has slipped far behind the government targets. According to one study, the UK has a shortfall of 4.3 million houses. Compared to similar European countries, the UK has not been building houses to keep up with the rise in the population. The number of homes per inhabitant has fallen behind other countries like Italy and France. The ratio of empty homes is running at around 1%, and this shortage of housing is one factor behind high house prices, especially in the southeast and big cities where the shortage is most acute. The problem is that despite frequent promises to build more, the past record offers little hope. It's easy to promise 300,000 new homes a year, but there's also a powerful electoral constituency which doesn't want to see these houses built. Now, Labour promised to be a YIMBY and build more houses on Brown Belt and also the greyer areas of the Green Belt. But even if they did build 300,000 new homes a year, and I'll believe it when I see it, but even if they do, it will take years to catch up with the shortfall from previous decades. Even a decade of building 300,000 homes a year would only keep house prices around 10% lower after 10 years. So the housing market is very different. But what's the impact of this new reality for people, living standards and the economy? These are 6 really big changes. Firstly, the pension system relies on the fact that old age pensioners have either paid off their mortgage or they are living in subsidised social housing. But in the coming years, we will have a new generation of people over 65 who still face very high market rents in the private sector. With market rents averaging well over £1,000 a month, this far exceeds the basic full state pension, which is around £880 a month. And this creates a real coming crisis of affordability. Pensioners who have paid off their mortgage will be in a completely different economic situation to pensioners who are in the private rented sector. Secondly, the housing market has become increasingly a source of wealth inequality. Household wealth has risen from 3 times national income in the 1980s to around 7 times national income today. And the tax system is not really designed to deal with this shift from income to wealth. Despite fears of Middle England, only 3.7% of households are ever likely to pay inheritance tax. Thirdly, the situation has created a real sense of frustration amongst younger people who face stagnant real wages, limited job opportunities, high student loans, and a very real housing crisis. With rent taking up a larger share of income than ever, there is more pressure to work longer hours, with many younger people taking on second jobs to make ends meet. Also, with a fall in social housing, low-income households in the private rented sector increasingly need more housing benefit to meet the shortfall. This cost the government £24 billion in 2022, and in a bid to reduce costs, it has not been allowed to rise in line with market rent. The housing crisis is expensive for the government, and also a knock-on terms effect in dealing with homelessness. But this demand for housing benefit is only going to increase as more are in the very expensive private rented sector. Fourthly, the housing crisis is influencing household formation, with young people living with their parents for much longer than ever before, or living in a bigger household than they would ideally like. At the same time, the UK has more single people living in multiple bedroom houses. There's a wide mismatch between under and over occupancy of the existing housing stock. One solution, by the way, is to improve housing supply specifically designed for older people. Fifthly, with more homes likely to be owned outright by the older generation, there's been a greater stagnation in the housing market, with less houses coming onto the market than in the past. Last year saw a big fall in housing transactions. And this one reason is because those over 50 are much less likely to move than those in their 30s. Sixthly, monetary policy is becoming increasingly less effective. When the Bank of England want to reduce inflation, they increase interest rates, which reduces the disposable income of mortgage owners. And this reduces spending and reduces inflationary pressures. But now we have a much smaller number of households who pay a mortgage, and even less who pay a variable mortgage. So it means that efforts to reduce inflation increasingly affect a much smaller share of a population. And the irony is that the recent increase in interest rates have actually caused a large rise in household income because it benefited savers more than it cost borrowers. That might change next year when people remortgage their fixed rate deals. But the important thing is that monetary policy is less effective than it used to be in previous decades. Now, what could be done about all this? Well, obviously we need to build more houses, but in particular build them where they are needed, in higher density, in the cities where the shortage is most acute. Reform of planning rules could help, but bear in mind there are already 1.1 million plots with planning permission agreed, but firms haven't yet taken up. Building firms complain about rising costs and the shortage of skilled labour, and addressing this skills shortage is important, but relying on the market is not enough. The golden age of the UK housing market, when a government was willing to intervene in building houses, building high quality social housing. I'd also say it quietly, but other countries who value home ownership less still do okay. A viable, functional rented sector with affordable, wide choice of housing can actually give benefits such as greater geographical mobility. Home ownership doesn't suit everybody. The problem is that the private rented sector is somewhat broken in the UK at the moment. In the short term at least, the direction of house prices is somewhat uncertain, with some hoping that the recent rise in interest rates will cause significant falls and improve affordability. But so far, those hoping for a big correction have been disappointed perhaps by the resilience of the housing market. This video looks at all the factors affecting prices in the coming months and whether we will have more falls or more stagnation in prices.